Hey everyone! Today, we have an exciting topic to discuss: the noticeable surge in foot traffic at Nio stores across China, largely due to the latest government subsidies specifically designed for battery swap-enabled electric vehicles. As we dive into this topic, we'll explore how these subsidies are influencing consumer behavior, what this means for Nio and the broader EV market, and how other brands like Tesla and Xiaomi are faring in this increasingly competitive landscape. With the introduction of these government subsidies, more and more potential buyers are making their way to Nio showrooms to explore their options. Anytime free money is on the table, consumer interest spikes, and this situation is no different. The influx of potential customers indicates that people are seriously considering taking advantage of this financial incentive before it diminishes. After all, subsidies tend to decrease over time, and those who need a new car may see this as the perfect opportunity to make their purchase while benefiting from significant cost savings. So, the big question is, are people actually making the purchase, or are they just window shopping? Well, the subsidies certainly serve as a major motivator, and while some individuals are still in the decision-making phase, many are expected to take the plunge and commit to buying a Nio vehicle before the incentive fades. Given that EV subsidies have historically been reduced year after year, this is a limited-time opportunity that buyers wouldn't want to miss out on. Of course, Nio is not the only automaker benefiting from heightened interest in EVs. Tesla, for example, is also drawing attention, especially with its latest iteration of the Model Y. The buzz surrounding this model is unmistakable. Test drives are happening all over the place, and more new Model Y units are hitting the roads every day. This proves that consumer enthusiasm for electric vehicles is not limited to Nio alone. Competition is heating up, making the market more dynamic than ever. That said, while Tesla is gaining momentum with the Model Y, Nio's new government subsidies provide a strong counterbalance, giving the company an extra edge in securing sales before it rolls out its 2025 vehicle lineup. This financial boost from the government might just be the strategic advantage Nio needs to maintain and even expand its market share in the face of mounting competition. Speaking of new models, Nio has been hard at work developing and testing the highly anticipated Firefly. Unlike many of its previous models, the Firefly has been extensively tested not only in China but also in Europe. In fact, several units have already rolled off the production line, and deliveries are expected to commence soon. This is particularly exciting because the Firefly will be among the first Nio vehicles to offer a right-hand drive variant, making it an attractive option for consumers in markets where right-hand drive vehicles are the norm. Europe, in particular, presents a strong demand for smaller electric vehicles, and the Firefly is well positioned to capitalize on this trend. If all goes according to plan, we can expect this model to perform well, further solidifying Nio's presence in the European EV market. With deliveries set to begin in the near future, we are approaching a crucial moment that could significantly boost Nio's sales performance. Naturally, with the increase in sales volume, many investors and analysts are eager to see how these factors will reflect in Nio's upcoming earnings report. While the company tends to release its earnings later than some of its competitors, we can likely expect the next report sometime in late March or early April. Based on recent trends, it's almost a given that Nio will report record-breaking revenues for the quarter. However, an important consideration remains: how will this revenue growth affect the company's overall losses? Historically, Nio has posted quarterly losses of around $700 million, and whether or not these increased sales will significantly reduce that figure remains to be seen. One key area that may impact Nio's financials is its aggressive marketing strategy. Over the past few months, Nio has ramped up its marketing efforts significantly, with ad placements in cinemas, TV commercials, and even promotional stickers in elevators. This level of advertising requires substantial investment, particularly as the company works to establish its new sub-brand, Onvo. The Onvo brand launch is critical for Nio, and an extensive marketing campaign is necessary to create awareness and drive initial sales. While this means a temporary increase in expenses, it could pay off in the long run if Onvo gains traction in the market. Beyond marketing, Nio continues to invest heavily in research and development R&D. Unlike other areas of expenditure that may fluctuate, R&D spending is expected to remain stable, as Nio remains committed to innovation and the development of next-generation EV technology. Another factor affecting Nio's financials is the company's approach to incentives and bonuses. Sales representatives earn substantial bonuses for selling higher-end Nio models, such as the ES7 and above, contributing to elevated costs of sales. Additionally, in Q4, Nio offered numerous promotional incentives to boost sales. Some of these included free battery swap vouchers, essentially deferring some expenses into the future. Attractive battery as a service BaaS promotions, including a pay 3 months, get 1 free offer previously pay 4 months, get 1 free. Generous subsidies on charging and battery swapping, worth up to 2K to 3K RMB per vehicle. While these incentives successfully drove sales, they also impacted short-term profit margins. However, looking ahead, Nio expects to improve its profitability by implementing strategic cost-saving measures. One major development that could significantly enhance Nio's margins is the company's transition away from NVIDIA's NX chips in its newer 2025 vehicle models. By replacing these costly third-party chips with its own in-house alternatives, Nio stands to achieve substantial cost reductions. While this shift won't immediately impact Q1 earnings, we should see the benefits reflected in financial reports for Q2 or Q3 of 2025. By improving margins and optimizing cost structures, Nio could be on a path to stronger financial performance, potentially narrowing its losses and inching closer to profitability. If this trajectory continues, the company may even experience a major breakthrough that propels its stock price to new heights. In summary, the latest government subsidies have created a surge in showroom visits and increased interest in Nio vehicles. While Tesla and Xiaomi are also experiencing heightened demand, Nio's ability to leverage this financial incentive could give it a much-needed boost before rolling out its 2025 lineup. As the company prepares for its upcoming earnings report, investors will be watching closely to see how increased sales, higher marketing expenses, and cost-saving initiatives play out in the financials. With the introduction of the Firefly and other new models, as well as the transition to in-house chip production, Nio is positioning itself for long-term success. So, will these factors be enough to send Nio's stock soaring? Time will tell, but one thing is certain: Nio is making strategic moves to stay competitive in the rapidly evolving EV market. Let me know your thoughts in the comments below. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.